if you're smart and you keep losing money in the market. I want to start by saying something clearly. You're not stupid, you're not broken, and you're not missing some secret indicator that everyone else has. In fact, there's a very real chance the reason this hurts so much is because you are intelligent, and no one ever warned you that intelligence could make trading harder instead of easier. Because everywhere else in life, intelligence works. If you're smart, you study harder, you get better grades. If you're smart, you think deeply, you solve complex problems. If you're smart, you analyze, you find better answers. So naturally, when you enter the market, you do what has always worked. You think, you analyze, you connect dots, you build explanations. And at first, it feels right. It feels familiar. It feels like you're finally playing a game that rewards thinking. But then something strange happens. The more you understand, the worse the results get. Not immediately, not in an obvious way, slowly, quietly, almost politely, you start losing in ways that don't make sense. Losses that feel unfair, losses that feel temporary, losses that feel like they should reverse. And that's the most dangerous kind. Because when a loss feels random, you cut it. But when a loss feels understood, you hold it. You tell yourself, this isn't a bad trade, it's just early. And right there, without realizing it, your intelligence has already pulled you into the trap. Here's the thing. Most people never say out loud. Markets don't reward intelligence. They reward behavior, not ideas, not explanations, not logic. Behavior. Specifically, behavior under uncertainty. Behavior under stress. Behavior when you don't know what happens next. And that's a completely different skill set from being smart. In fact, it often conflicts with it. Because intelligent people are trained to reduce uncertainty, to ask why, to look for causes, to build mental models. But the market doesn't resolve uncertainty for you. It forces you to act inside it. And if you're not emotionally prepared for that, your intelligence starts working against you. Let me explain what that actually looks like. A smart trader doesn't enter randomly. They enter with a reason, a thesis, a narrative, a story about why price should move. And the more intelligent the trader, the more detailed that story becomes. Macro context, liquidity zones, sentiment shifts, order flow, correlation. At some point, the trade stops being just a position. It becomes an argument. And once a trade becomes an argument, you're no longer managing risk. You're defending a position. This is where most intelligent traders don't realize they've crossed the line. Because nothing feels emotional yet. You're calm. You're composed. You're still thinking clearly. But underneath that calm thinking, something subtle is happening. Your identity is getting involved. Not in an obvious ego way. Not in a loud, arrogant way. In a quiet, internal way. You don't want to be reckless. You don't want to gamble. You just don't want your reasoning to be wrong. And that distinction matters. Because now, when price moves against you, your first instinct isn't to exit. It's to explain. You look for context. You zoom out. You say things like, this move doesn't invalidate the structure. And sometimes, you're right. Which is what makes this so dangerous. Because the market will occasionally reward this behavior, just enough to teach you the wrong lesson. It teaches you that thinking harder saves you. That patience is always virtue. That drawdown is just misunderstood genius. But over time, something else happens. Your average loss starts growing. Your exits get slower. Your position sizing becomes inconsistent. And you don't notice it right away because you're focused on being right, not being safe. This is the intelligence trap. Smart people believe that if they understand something deeply enough, they can control it. But markets don't submit to understanding. They don't negotiate. They don't explain themselves. And they don't care how reasonable your logic is. They just move. And when they move against you, they expose something intelligence alone can't protect you from. Your need to make sense of uncertainty. This is where less intelligent, or rather, less analytical traders often accidentally outperform. Not because they know more, but because they don't. They don't build complex narratives. They don't attach meaning to every fluctuation. They enter, they exit, they accept outcomes. And because their identity isn't tied to explanation, they don't hesitate when it's time to leave. They don't need to be right. They just need to be intact. Smart traders, on the other hand, often feel like exiting early is admitting failure. Not financially, intellectually. It feels like saying, my understanding wasn't enough. And for someone who's built their life on understanding, that's deeply uncomfortable. So instead of exiting, they stay, they add, they adjust, they refine, and all of it feels rational. Until one day, they look back and realize their biggest losses weren't caused by bad ideas, but by refusing to let go of good ones. And this is where most people get confused. They think the solution is better analysis, better entries, better indicators, but the problem was never lack of intelligence. It was excess attachment. Attachment to being right. Attachment to explanation. Attachment to control. And until that's addressed, no strategy will save you. And this is the part where things quietly shift. Because once you see that attachment, once you recognize it, you can't unsee it. You start noticing how often your mind tries to rescue a position instead of simply responding to it. You notice how quickly a trade stops being about risk and starts being about justification. You catch yourself explaining price action instead of listening to it. And at first, this awareness is uncomfortable because it feels like you're being asked to give something up. Not money, identity. The identity of being the person who understands. The person who sees what others don't. The person whose ideas are supposed to work because they make sense. Letting go of that feels like regression, like lowering your standards, like betraying your intelligence. But that's an illusion. What's actually happening is that you're separating intelligence from decision-making. And that separation is what creates space. Space between a thought and an action. Space between an explanation and a commitment. Most traders never experience this space. They move directly from idea to execution, from analysis to exposure. Smart traders move even faster because their ideas feel more convincing. But once you slow that process down, you begin to notice something important. Thoughts are cheap. They appear automatically. They sound persuasive. They demand attention. But they don't require obedience. This is where disciplined traders operate differently. Not because they don't think, but because they don't act on every thought. They allow thoughts to pass without turning them into trades. They don't feel the need to express every insight with capital. And that restraint feels unnatural at first, especially if you're used to being rewarded for acting on what you know. But the market doesn't reward expression. It rewards survival. And survival is mostly about what you don't do. It's about the trades you skip, the size you don't add, the explanations you refuse to entertain. This is why experienced traders often sound repetitive. They say the same things. They follow the same rules. They avoid the same mistakes. Not because they lack creativity, but because they've learned that novelty is expensive. Every new idea is a new risk. Every clever adjustment is another chance to override discipline. So instead of expanding their thinking, they narrow it. They intentionally reduce the number of decisions they're allowed to make. They predefine exits. They predefine risk. They predefine conditions. And once those conditions are met, they act, or they don't, without debate. To an intelligent mind, this can feel suffocating, like unnecessary limitation. But what it actually does is remove the emotional burden of choice. You no longer have to decide in the moment. When uncertainty is highest and emotions are loudest, the decision has already been made by a calmer version of you. And that version of you is far more reliable. This is the moment where trading starts to feel different, quieter, less dramatic. You stop riding emotional highs and lows because your exposure is controlled. You stop replaying trades in your head because there's nothing to argue about. The outcome doesn't define you because you followed your process. Win or lose, you did what you said you would do. And that consistency does something subtle. It rebuilds trust, not in the market, in yourself. You begin to trust that you won't abandon your rules just because a trade feels uncomfortable. You trust that you'll survive bad sequences because your risk is contained. And slowly, very slowly, your nervous system stops treating trading like a threat. This is what most people mean when they say trading is psychological, not emotions. Regulation, the ability to remain stable inside uncertainty. And intelligence alone doesn't give you that. In fact, it often delays it because intelligence keeps trying to solve what can only be managed. And once you accept that difference, the struggle begins to ease. And this is where the real change settles in, not as a breakthrough, not as a dramatic realization, but as a gradual loosening. You stop feeling the need to constantly be engaged with the market. You stop feeling like every move requires your interpretation. You realize that the market will do what it does, whether you understand it or not. And strangely, that realization feels relieving. Because once you stop expecting certainty, you stop chasing it. You stop demanding that trades make sense. Before you allow yourself to act, you accept that most of the time, you're operating with incomplete information. And instead of fighting that, you build around it. This is where intelligent traders finally mature. Not by becoming sharper, but by becoming quieter. They stop trying to impress the market. They stop trying to extract validation from outcomes. They stop needing every trade to confirm that they're competent. And this changes how losses feel. Losses stop feeling like failures of understanding. and start feeling like operational costs. Expected, contained, unremarkable. A loss becomes something you observe, not something you internalize. And because it no longer threatens your identity, it no longer demands a response. You don't rush to make it back. You don't try to prove anything. You simply move on. This is why disciplined traders rarely talk about emotions. Not because they don't feel them, but because emotions aren't steering the process. The structure is, the rules are, the limits are, and within those limits, the mind finally relaxes. This is also where boredom returns. But this time, it's a different kind of boredom. Not the restless boredom that pushes you to overtrade. The quiet boredom that comes from knowing there's nothing you need to do right now. That boredom is a sign that you're no longer forcing activity to feel in control. You've accepted that control comes from restraint. And this is the moment when intelligent traders stop losing money quickly. Not because they found a better strategy, but because they stopped accelerating their own mistakes. They stopped compounding small errors into large ones. They stopped letting intelligence override discipline. They learned to let rules say no when their mind wanted to say maybe, and over time, that changes the entire trajectory. Your equity curve doesn't explode upward. It stabilizes. Your drawdowns don't disappear. They shrink. Your wins don't feel euphoric. They feel normal. And that normalization is what allows consistency to exist. Because consistency doesn't survive excitement. It survives calm. Eventually, something else happens. You stop thinking of yourself as a smart trader. You stop categorizing yourself at all. You become process-oriented, outcome-agnostic. You focus less on what the market owes you and more on what you're responsible for. Your risk, your exposure, your behavior. And that responsibility is grounding because it's the only part you were ever meant to control. The market was never a test of intelligence. It was a test of self-regulation, a test of whether you could operate effectively in an environment that doesn't explain itself. And once you understand that, everything reframes. Losses don't discourage you. Wins don't inflate you. You stay centered. You stay operational. You stay intact. And that's the quiet secret behind long-term survival. Not brilliance, not prediction, but restraint. Because the market doesn't reward those who think the fastest. It rewards those who can pause, those who can wait, those who can let uncertainty exist without trying to conquer it. And when you finally learn to sit comfortably inside that uncertainty, trading stops feeling like a battle. It stops feeling personal. It becomes a practice, a disciplined one, a quiet one. And for the first time, your intelligence isn't something you're fighting against. It's something that's finally working for you.